Hello there, my name is Nasrallo and welcome back to my YouTube channel. Now in today's video I really want to give you a really mega hopium scenario for Bitcoin and in general cryptocurrencies and all the high risk assets. And this is something that is very fundamentally possible and actually quite likely as well. So if you want to know exactly why do I think that there is some hope for high-risk assets right now, then watch this video till the end. And as always, if you're brand new to the channel, then hit that subscribe button, hit that notification bell, and also hit that like button, because every time when I see a lot of likes, I'm motivated to create this content just for you every single day. So it's actually quite easy to just click that like button. So go ahead and do that, and thank you in advance. So without any further ado, let's just quickly talk about this. Let's start with technicals, because usually we actually start with fundamentals, but this time let's start with technicals. And we were observing this kind of a pattern, this kind of a wedge right here in the daily chart and also in the 4-hour chart. And usually these are bearish scenarios. However, there is a very interesting way how you can remap the current key market levels in a way that it actually becomes ever so slightly more bullish. And now, before we switch to those technicals, let's quickly talk about the fundamentals that are going to be influencing this kind of a thought process. And remember that if you want to be trading actively yourself, longing or shorting Bitcoin or any other cryptocurrency, then you can do it over on Bybit or over on BitGet. And with my exclusive links, which you can find down in the description of this video or in the pinned comment, you can claim up to $12,100 in initial deposit bonuses, $8,000 with BitGet and $4,100 with Bybit. So check out those links. All the instructions are down there. And remember that we're going to be selecting the winners of the $7,000 giveaway very soon. So check out the instruction of this giveaway right here. And also join my free Telegram channel. There is a link down in the description of this video so that you're always alerted when we're doing these kinds of awesome things, and also when the market is on the move. So when it comes to the fundamentals, we're going to go to actually this chart right here. But before we're going to talk about any technicals, we have to actually map it out ourselves once again here. Let's quickly go to the most important stuff for this video, and it's this one right here. I know it looks very confusing, but just bear with me. So the blue line right here is the consumer price index. So basically it's the inflation, and the red line right here is the unemployment rate. And we can see during COVID the unemployment has skyrocketed, but right now actually the unemployment is the rate of unemployment is very small, so it doesn't really coincide with a recession. So usually when we see a big recession, then we see huge unemployment, people losing jobs, etc. And that's not what we are seeing right now. So does it mean, and the markets could potentially take this as a negative, meaning that we're going to still be increasing the rate tremendously and the market is going to keep going down and down. However, if you're going to look at the history of this chart right here since 1960s, you're going to see that oftentimes high inflation, when it coincided with low employment, usually with these kinds of extremes, it was marking basically the beginning of the recession itself, which sounds bad, but bear with me. Usually it meant that this was the moment when they were flipping. So they were starting, the unemployment started to rise, but the inflation was starting to go down. So some people are saying that right now, if on the 10th of August, as I told you guys before, at 8:30 a.m. Eastern time, we're going to see the CPI data. If it's going to be at least on the same level as the last month or better, then we're going to potentially mark the peak inflation, and it's going to mean that the Federal Reserve, let's go back to this chart right here, that the Federal Reserve is going to slow down their quantitative tightening and potentially even go into quantitative easing, which in turn is going to translate into high-risk asset rallying, and especially Bitcoin. So this, as you can see here, 2000s, and also when you've seen the 2008 right here, and also the situation in the 70s, the stagflation, and a lot of the instances here are very similar to the one that we're currently seeing. So we could actually be on the verge within the next few quarters of quantitative easing. So for that reason, what does it mean for us and what can we potentially trade? And I'm going to give you a precise trading setup, so you don't tell me later, Thomas, you didn't give me a trading setup before you traded yourself. I always give you trading setups. Just always watch my videos from the beginning and until the end. So we've seen this pattern in this chart right here. You're already familiar with it. It's more of a short bias. So if you break below here, this would be a perfect shorting opportunity. However, let's take a look at a positive outcome. If the CPI data is going to come out even or better than last month, which would coincide really well with this chart right here that we've just seen, and that would be a bit different. So let's draw it together. It's a bit similar to what we have right now, but it still is a bit different. So this is going to be our approximate, and as again, I'll emphasize approximate support, and also an approximate resistance like this, or you can actually, move it slightly higher like this. So, and this kind of a squeeze oftentimes is the signaling a potential true break model. So the break and retest and going above. So this is usually what this pattern entails. So, and I think that it's gonna very well coincide in terms of the days with the August 10th. So the August 10th will be right in this, right at the end of this formation, of this slowdown of volatility. And again, this would be, let's quickly take a look at the targets that we're seeing that could be possible. And the break of this would be the target of the resistance of this daily wedge that we've hit, that we've seen previously in the Bitcoin chart. And it would be at about $29,400. Let me know that in the comments if it sounds sweet, because I've been buying a lot of Bitcoin and it does certainly sound very, very sweet. Now, of course, again, guys and girls, we always have to, being traders, we have to always entertain both possibilities. So in this instance, if we still gonna see the threat of stagflation, so CPI data coming out really bad and not coinciding with the concept that I've just described in this chart right here, then certainly this is something that the market hasn't priced in just yet. So there is still an opportunity of us to break down. And let's take a look at the breakdown targets right here. Let's just take it down here, and potentially this could be at about $19,000, just a technical target. Of course, it can send the price much lower, and it's going to be, a lot of support is going to be coming in from these levels right here that are from the weekly chart, by the way, that are historically this red level has been historically very important since 2015. So it's a 7-year-old key market level that has been holding the price like no tomorrow. So these are the two scenarios that I'm going to be personally trading. And don't just go into the comments right now saying, oh yeah, well, as always, or up or down. I'm giving you a precise two scenarios. CPI data comes out good, we're trading a break above. The CPI data comes out bad and we have a break below, we are shorting it. Perfect, simple, spot on, beautiful, crystal clear. So like the video, check out this full course to cryptocurrencies if you want to learn how to trade cryptocurrencies correctly. Spend that time today on this beautiful Saturday, and I wish you an amazing day. Stay smart, stay rich, and I'll see you in the next video. Bye-bye.